ABC Listen. Podcasts, radio, news, music and more.
Hi there, it's PK from the new podcast Politics Now. Sam Hawley will be with you in a second for ABC News Daily, but I just want to tell you about my new podcast Politics Now. As news breaks, we'll bring you the latest analysis in your feed. It's called Politics Now and you can find us on the ABC Listen app.
It's just shy of 3 years since the Reserve Bank began the most aggressive rate hiking cycle in its history. Now it's delivered a slight reprieve, taking 0.25% off the cash rate. Today, the ABC's finance expert, Alan Kohler, on what the rate cut means for households and when the next one might follow. I'm Sam Hawley on Gadigal land in Sydney. This is ABC News Daily.
Good afternoon. Thank you all for coming. As you know, the board decided today to cut the cash rate by 25 basis points to 4.1%. The cash rate has been at 4.35% since November 2023.
Alan, a lot of people have been waiting a long time for this to happen, and finally it's arrived, a rate cut.
That's right, and it's in fact the longest period for a while that interest rates have been where they are, at a peak.
Yeah.
I think it's about twice as long as the average. It's a long time. So it was well flagged. I don't think anyone was really surprised.
So the official cash rate, it's been at a 13-year high of 4.35% since November 2023. So that's a long time for people in financial pain, isn't it?
Well, it is. And, the financial pain has been worsened by the increase in house prices and the increase in consumer prices that's continued. Obviously, in the recent times, the inflation rate has come down, but the fact that the inflation rate has come down just means that prices are rising more slowly, that's all.
Tell me the reasoning behind this. What's the RBA Governor, Michelle Bullock, saying at this point?
The main thing she's saying is that inflation has fallen more than they expected.
It's clear that higher interest rates have been working as anticipated, restricting economic activity and putting downward pressure on inflation. The board judges it's time to reduce a little bit of that restrictiveness, but we cannot declare victory on inflation just yet. It is not good enough for inflation to be back in the target range temporarily. The board needs to be confident that it is returning to the target range sustainably.
So their forecast now for inflation in the year to June 2025 this year is 2.7%, down from 3%. So they're saying that basically inflation, and I'm talking about core inflation here, the trimmed mean, as they call it, which I'll explain if you want.
Yes, I would like you to, I think, just to give us an update, because it does get confusing, doesn't it?
Yeah, so the consumer price index is basically the average of a whole bunch of individual items. So what they do to get the CPI, the main CPI, the headline one, is that they just average all the prices. To get the core or trimmed mean one, as they call it, is they lop off the 15% of the biggest price rises and the 15% smallest price rises, and then they average the 70% in the middle. And the reason for doing that is simply that they think that the biggest and smallest price rises tend to be short-lived. When there's volatility, that's not really what they should be paying attention to. They should pay attention to the core, the sort of the sustainable and lasting inflation, which they think is the 70% in the middle. And so that's what they do. And the most recent trimmed mean inflation was 3.2%, which is outside their target range of 2 to 3%. But they're now forecasting that will fall to 2.7% by June.
Right, and that's within the target band.
That's right. So that's really the key to why they've cut interest rates. They think that inflation is going to be within their target band in June.
Okay, so political pressure, public pressure, momentum, none of that sort of came into play, or did it? Because there was a lot of talk about this ahead of this decision.
Look, obviously I've never been sitting in an RBA board meeting, but I would be amazed if the pressure of any sort, from political or public pressure, made any difference. I mean, I just think that these people are really serious about their job, and they kind of focus on what they're doing. And you know, they spend 2 days looking at the numbers, thinking about what they're doing, arguing, and so on. And I think that the fact that Jim Chalmers and Anthony Albanese and you and I might like interest rates to be cut or not makes absolutely no difference.
All right, well, Alan, just tell me, what does a 0.25% cut mean for, say, the average mortgage holder? I know everyone has a different size mortgage, but give me a sense of that.
Well, not very much. I mean, we're talking, you know, the average mortgage is about 600,000, 630 or so thousand, and that will reduce by about 100. I mean, look, it's not much of a fall, and I don't think anyone should be expecting a lot of rate cuts this year. I mean, I think the Reserve Bank's going to be very cautious, you know, maybe 2 or 3 at the most rate cuts. So I don't think anyone should be looking to the Reserve Bank to solve the cost of living crisis on their own.
That doesn't sound very fair, Alan, because interest rates went up 13 successive times. So it would be nice if they fell as quickly, wouldn't it?
Well, yeah, but it was from 0.1%. I mean, that was crazy. I mean, well, no, not crazy. It was just like...
It was very low.
Went to 0.1% in the middle of the pandemic, and the reason the interest rates had to be cut to 0.1% is because we went into the pandemic with the cash rate at 0.75, which I think was crazy. I mean, so in a sense that distorted the whole subsequent process of setting interest rates. And the reason that the cash rate was 0.75 at the beginning of 2020 was because inflation had been below the 2% target rate for a few years. It had been at 1.6%, and the Reserve Bank wanted to get it up. And so they cut interest rates to 0.75%, which I think was such a mistake because, you know, who cares if inflation's only 1.6%? Big deal.
I mean, this is great, isn't it, for the Treasurer, Jim Chalmers, for the Prime Minister. They'd be pretty happy about this at this point.
Under this Labor government, inflation is down, wages are up, unemployment is low, and now interest rates are falling as well.
Yeah, well, so the last election there was a rate hike in the middle of the campaign. So this time it's a rate cut. That's right. It'll be beneficial, I guess. Beneficial
for them, but the cost of things is still really high, isn't it?
Well, that's right. I mean, since the pandemic, prices are up 22%. Even though inflation has slowed, prices are still rising, and what's happened is the prices have gone up 22%, and so that's difficult. And so that's on top of the increase in interest rates that's occurred and the increase in house prices that's also occurred.
What does this mean, do you think, for house prices, for the housing market? Does it make any difference there when rates start to come down a bit?
Well, obviously government policy is trying to now moderate the rise in house prices and, you know, possibly even stop them, but they're trying to increase supply of housing to make housing more affordable. This will obviously act against that policy. They'll be, you know, this will lead to higher house prices probably. I mean, most of the time when rates are cut, house prices go up. So, you know, whether that happens this time or not, who knows, but it probably will.
All right, well, Alan, as you say, we shouldn't expect a rapid decrease in rates. Perhaps there'll be another one this year. But let's just look at the decision-making by the RBA and whether it's actually got things right. There was a fear, wasn't there, that if it moved too fast with rates and pushed them too high, that could push us into a recession. That didn't happen, did it? So has it done the right thing here?
Oh, look, I think if things work out now, and as they've forecast, that is to say inflation declines to 2.7%, and also the other forecast they've made today is that unemployment will fall, GDP will fall. So look, if all that happens as forecast, it'll be a triumph for them, really. I mean, as you say, they've hiked rates 13 times, they've moderated inflation, and they haven't caused a recession. I mean, any time a central bank can pull that off is big pats on the back.
Although households might feel like they're living through a recession, that's for sure.
Well, they are, in fact. I mean, as we keep saying, there's a per capita recession and has been for 7 quarters in a row. So it's simply gross domestic product, which is the output of the entire country, divided by the number of people, which gives you a per capita number. And it's been shrinking for 18 months. So it's at an individual level, it is a recession and has been a recession. And so the only reason that there hasn't been a recession is because of high immigration and government spending. Nevertheless, that's the reality. The GDP is what it is, and we don't kind of put a headline out saying we're in recession until GDP shrinks 2 quarters in a row. And that hasn't happened. So I guess the Reserve Bank is patting itself on the back for not having caused a recession, even though it's only because of immigration and government spending.
Well, as a nation, Alan, we have been slow to drop rates, though, haven't we? They began falling ages ago in places like New Zealand, the UK and Canada.
I think those other places are starting to think they might have made a mistake. I mean, the Federal Reserve in the US is now starting to talk about a rate hike, having cut last September by 0.5%, and that looks terrible. They cut and then, have to put it up again because inflation looks like it's being rekindled. I mean, not just by tariffs, which obviously is inflationary when tariffs go on the price of imports. It's really just more an underlying fact of the US economy, which is starting to get quite hot. And inflation is starting to rise. They had their CPI out last week and it was higher. It was up to 3%, which is more than it had been. And so the Federal Reserve is coming out saying, well, you can forget about more rate cuts and we might have to hike them.
Oh, gosh. A very unpopular RBA, I would think, if they dropped rates and then increased them again.
Well, that is a really big black mark for any central bank to be having to hike rates 6 months after cutting them. I mean, that's really not what you want at all. Or the reverse, cutting them 6 months after hiking them. So, I think that the Reserve Bank was probably wise to hang on. I mean, the fact is that unemployment, which is the other metric that it is mandated to observe, has remained low. In fact, unemployment in Australia has fallen since last July. It was 4.2%, then fell to 3.9%, now 4%. So unemployment's coming down. That's normally a sign that rates need to go up, not down.
But the strength of the jobs market has been surprising. Many indicators suggest that the labour market is tight and on some measures tightening further. While this is good news for job seekers, the board remains alert to the possibility that it is signalling a bit more strength in the economy, which could delay or stall the disinflation process.
All right, and so if the cash rate now is at 4.1% after this cut, where will it land, do you think, and settle?
Look, the 2% mortgage rates that prevailed, in 2021 were really an aberration. I think that the sort of normal high 3s to 4% is kind of the average, This is what we should, basically expect. We certainly shouldn't expect mortgage rates around 3% again.
Okay, so Alan, just tell me then, when do you think the next rate cut will come? I don't know if you can predict it, like in which month. Is it much, much later this year? Oh,
no, I'd go April. I think that usually they go, fairly quickly one after the other. They didn't want to do 0.5% at once, but I think it's reasonable to go, okay, well, if we're cutting, we need to do it properly and keep an eye on the data, but I'd say more likely there's another one quickly, probably in April.
Alan Kohler is the ABC's finance expert. This episode was produced by Sydney Peed and Cara Jensen McKinnon. Audio production by Adair Shepherd and Sam Dunn. Our supervising producer is David Cody. I'm Sam Hawley. Thanks for listening.